welcome to today's podcast. It is April 7th, getting close to that D-Day, tax day, April 15th, coming up in I guess it would be a week from tomorrow. Is that right? Tomorrow being Wednesday, so a week from tomorrow. So, always a fun day. So we got the stock market still in the green. We got about 45 minutes to go until the market closes, and it's really been kind of a lackluster day. I think even early on, the Dow was up about 100 points at its peak. We'll pop up a daily picture, an intraday picture here, and you can see this is what today looks like. So we started off a little stronger, and then as the day has gone on, we've definitely rolled over a little bit. And not much news out there. I'd say, we had this initial pop, kind of lackluster, and we're getting a little sell-off maybe into the close here. We'll see how it closes. We are seeing a little rally in bonds, which we'll go into in just a minute. But overall, and kind of zooming out a little bit, it's not a big news day or anything like that, but I hadn't done a podcast in a while, and just wanted to get this out to you. Really, the theme right now is that we're getting mixed data on the economy. If anything, a lot of the releases over the last few weeks have been on balance more negative than positive. And so I think what's perked the market up over the last few weeks has been the fact that, yes, that may translate into the Fed being a little more, I don't want to use the word patient because they don't use that word anymore, but patient. They're going to maybe not raise interest rates soon. And so stock market's celebrating that. But in general, if we kind of zoom out, you can see since October, we've talked about this before, the fact that when they ended quantitative easing, we had this big sell-off, this snapback. But really since then, what have we had? We've had this basic sideways here. And, the market's trying to digest, trying to figure out will they or won't they raise rates. But the bottom line is we're still getting, I think, an upward bias because stocks are still the default. Okay, we're still seeing the trend line going in the right direction. These lines are still going in the right direction, right? That's what's happening. If we zoom in on a daily basis, of course, a lot of vibration. The 100-day moving average on the S&P 500, you can see this purple line has been kind of the area we've bounced in. And so it still feels like it wants to go higher over the next few weeks, barring any type of catastrophic event, Iran, whatever the case may be. Now, what I have seen so far is a change in character in 2015 from 2014. Okay, and what I've seen so far, and here we are, we've only got 3 months under our belt this year. We haven't seen a lot of movement in the markets. Overall, we've seen some volatility, but as far as point to point, have not seen a lot. And in fact, if you look from really January 1st until now, this is basically start to finish kind of where we are. So we were down a little bit, up a little bit, down a little bit, and kind of finishing where it started. But here's the difference. If you go over to IFA, which is the kind of developed nations international, this has had a great year so far. In fact, IFA's up about 8%. So we broke this trend, and now you're seeing it's heading up so far this year. And remember, we've been discussing this at length over the last several months that the better value is international right now. It doesn't mean it's necessarily going to work because, the U.S. has worked and continues to work, but you're seeing a subtle thing that I don't know if a lot of people are talking about, but you have the emerging markets right here, which has had a big few days here, down a little bit today, but not coincidental that, and by the way, it's stuck under the 200-day moving average for now, but not coincidental that the U.S. dollar may have, at least in the short term, peaked a little bit. And you can see it's at a spot right now where maybe it could find support. If it breaks through to the downside here, not only look for further weakness maybe from the U.S., but at least an underperformance by the U.S. relative to international. So watch the international. Not only are the stocks cheaper, not only are the economies in some places growing faster, they're getting more stimulus. Remember, our Fed's about to take it away. Theirs is still doing it and doing it quite a bit. So watch that. So the international is starting to pick up. We've also seen a move in gold. We wrote a blog article talking about the fact that we were buying gold somewhere, a week or two ago, and that trade's still in place. watching it carefully. Obviously, if things break down, we would exit it, take a small gain, and move on. We're hoping for bigger gains. I would like to see gold move up to this area here, because if we zoom out a little bit, you'll see that gold is that downtrend there. If we can get to the upper band of that, that would be about a 10% gain on our trade in pretty short order, which would be very nice, especially as a market that's kind of gyrating, moving sideways. So you're seeing gold work a little bit. You're seeing international work a little bit. And certainly when you look at oil, you're seeing oil work a lot. Oil is firmly above, 52 bucks, 53 bucks, somewhere in there today. And this is, of course, oil was up about 3.5% today. This is the USO, which is the ETF. So the price doesn't tell you what the WTI price is, but the direction does. And you can see we had some positive divergences here once we made a new low back on, what day was this? Back on March 18th. So here we are 3 weeks later, and we've had a nice rebound since then. And, you know, we've actually seen a rebound of maybe about 20% or so since that time. So oil could be turning the corner here. We had called for and again, this is updated through yesterday. This is oil, so we didn't take today's into consideration. It was up a little bit more today, about 3% or so. But, you know, if oil does have a 6 handle on it, then things start to look really good again in the oil space. And some of those stocks have moved up quite a bit. And we had drawn some pictures about oil bottoming maybe in the mid-40s, and we're kind of seeing that. So could it drop again? It very well could. In fact, some people are saying maybe we could get down and make this inverted head and shoulders where maybe that was the low, but we kind of come back and test it one more time. Maybe, maybe not. We'll see. But as an investment going forward, I like it. People I talk to, definitely there's some layoffs, there's some projects being delayed, but there's also some good things going on. And that's, again, about all I can say about that, but there is some positive things happening. So watch that. But you've seen this, again, shift. What's worked this year? Energy, metals and mining, gold, for example. And again, not a lot. Gold's up about 2.5% or so. It hasn't been a huge move. But again, relative to the S&P, remember the S&P had been the leader the last few years. Is that guard changing? Is something changing with that? In fact, you know, again, the emerging markets working, foreign's working, and yet the Dow Jones and the S&P are kind of flat for the year. So there are some things working that are different, and it's only the beginning of the year. You know, we only are on 3 months into this, but it could be subtle. You could see international start to take off, and not that the U.S. would go down, but maybe it just starts to lag a little bit. So watch that, because we've had a pretty significant outperformance by the S&P, and it's causing people, when you look at the S&P, this trend here has caused people to, start to abandon active management strategies and risk strategies and all those different things, and saying, well, I don't need international, I don't need gold, I don't need bond, I don't need anything else but the S&P. And we think that's very dangerous over the long term, because yes, it has worked longer than we thought it would, this outperformance by the S&P, but over the long run, that's not the case. Over the long run, what's happening is the more passive you are, the more you could get hit with these shocks, the more you don't have sell disciplines in place, and other assets will work in down years. So everybody's waiting for this. When's the stock market going to crater and crash? We're not saying that, but certainly if we get something that could, maybe we end up the year down 5%. If that happens, it's very possible you could see other asset classes, sectors, or international have a fantastic year. So there's still going to be places to make money. So we don't have to see the whole thing crater. We could just see maybe the American markets pause a little bit. Yes, the S&P is a little rich right now, valuation-wise. No question about it. We're about to enter earnings season. And I will say, earnings season, there is a negative bias right now. So what's happening is there's a negative bias, meaning that people aren't expecting much. So what if these companies come in and actually, for the most part, beat earnings expectations? Then you would see this go to a new level, maybe new highs on the S&P. So again, looking at the internals, the pullbacks that we're getting, in other words, when we monitor this pullback and this pullback versus these gains and these gains, the strength is much better on the up days than the down days weakness. So on balance, I still think we move higher. Again, I want to emphasize where we are in the big cycle here. If you look at the big picture here, we're still in an aging bull market. I still think we will look back to October of 2014 and say, that's when things changed a bit. That's when the market became more of a prove me. So prove to me what's going on. In other words, the profits have to keep going up for the S&P to keep going up. Are people going to keep piling money in and just making the valuations go higher, the multiple expansion they call it? Not necessarily. And so we need to watch that. But, you're seeing things like some deterioration in the Russell 2000. Even though the Russell 2000's outperformed since October, which it has, you're still seeing more deterioration in the Russell 2000 than you are in the large cap. And that's what happens when a market's mature. People start to move to the large caps. So large caps sometimes are the last to go down. Go back to 2007, take a look at that. So right now, fairly constructive on the market still. Keep your systems in place, let them work. But definitely the things that have lagged for the last couple of years have worked so far in 2015. Not to a huge extent, but something definitely has changed a little bit. And and by the way, if we take a look at the volatility index here, you can say we haven't gotten that spike high enough to get us, hey, a great entry point. But I wouldn't be doing a bunch of things right now. I would maybe take some trades, look for some investments, look for some things that have sold off. But because there are some things that are still working. But overall, you can see the Dow Jones here still meandering. And, you can't say much about this. You can't say, well, this thing's definitely strong. But I can tell you that this uptrend line, yes, just because we're moving sideways and we zoom in, if we zoom in right here, which is what we like to do, you go, well, nothing's really happening. If you zoom out, all these lines are still going up. So we're still in an uptrend. It's just a pause in the uptrend. But we've had the third decent day in a row here, a little selling going into the close. We were up 100, sitting here up about 50 with 30 minutes to go. Who knows what the next 30 minutes will bring. But I think we still have a little upward bias. The one thing that is catching my attention today a little bit is if we look at the 1 minute picture, this is what Treasury bonds are doing. So yesterday sold off dramatically, okay, after a stronger a stronger economic report. I think it was the services report that came out was stronger than anticipated. So we get this big sell-off. Now, sitting here kind of even on the day, and now we're getting a rally into the close. Is that because people are, scared of the stock market, so they're buying treasuries? Who knows? If you take a look at the picture of treasuries, they haven't been doing a lot either. Remember, they had a real strong end to the year, 2014, gave some of that back a lot in early 2015, but overall, the uptrend's still intact for bonds, meaning if you own treasuries, but how much upside is left in that? Well, it really depends on how bad the economy gets. And so still, we have an economy right now where when it's weak, investors celebrate by buying treasuries and buying stocks. And what a weird world we're in, but that is the world we are in right now, which is celebrating weak news. Not too weak, but just a little weak. So that keeps the Fed engaged, and yet companies can still profit. And there are good companies out there still to this day that are reasonably valued. But as the overall market's getting a little more expensive, and that's why, again, from a value standpoint, international makes more sense to us. How much do we have? Not a terrible amount, but enough to be happy on days where the S&P's maybe down a little bit and the international's up a little bit. And we can certainly add to that if we see that it's not just a head fake rally, but actually a trend developing. All right, that is all I've got. Hey, don't forget, each and every Saturday we are 7 a.m. as our radio show comes on Saturday, 7 a.m. South Texas, San Antonio and the surrounding areas. You can stream it live on AM 930, The Answer in San Antonio. You can also go to our website, eggerscapital.com, to listen to the shows archived, and also get the video podcasts, of course. You can get some articles, etc. And you can even sign up on there. So anytime any of that stuff comes out, it gets emailed right to you. So make sure you do that. Of course, we're on Twitter and Facebook and Google Plus and iTunes. All right. If you want to submit a question, Karl at eggerscapital.com. We will talk to you soon. Have a wonderful evening.